If you want a good time, if you want a good time, let me hear you say, hey, everybody say, hey. If you want a good time, if you want a good time, let me hear you say, hey, everybody say, hey. If you want a good time, if you want a good time, let me hear you say, hey, everybody say, hey. If you want a good time, if you want a good time, up, get 'em up, get 'em up, get 'em up, get 'em up, put your hands up.
Good morning, good morning, good morning. It is Wednesday, April 24, 4:41 a.m. over on the East Coast, and congratulations. We have just gotten 2 green days in a row and exactly what continued to talk about going into the end of last week, that a big bounce was coming. And that's exactly what we have gotten so far. We have gotten a 2.47% bounce as of now. And as you will recall, April 16th and 17th, how we had that problem up at 50.80, 50.79.84, 50.77.96. Exactly where we came up to yesterday, having breaking that 50.55 problem that we were having towards the latter part of last week. Everything looks good. 2 green closes in a row. First time we have done that since the end of March, where we put in the all-time highs. And range is still there, although it is starting to slow down a little bit, but range is still there, and our VIX is still there, so things are good. Looking over on the spreads, 2 plus 1% days in a row. Bang, bang. Didn't expect it yesterday, but the PMI suddenly came out hotter from a bullish point of view because it had been 4 months in a row low, and kaboom, right through 50, 55, 10, 15, 10 o'clock in the morning. And then from there, it was just sideways for the entire rest of the day. So all of you who are in that risk 50, 60, 50, 55 using the problem, $3.50, $4, $3.61, some of you, you could roll it, you could take the hit. Didn't make a difference because, as we had been continuing to talk about, looking back here on, where are we? Monday. Yeah, Monday's watch. IWM 0 DTE focus. And you've got your start of the week. Those all worked. The trade of the week, the starting out with the weekly candle. I'm not going into the chat room right now. 250 down to 40 cents, 50 cents, I believe, yesterday. So, yeah, again, take it off, keep it. It's up to you. But scrolling down, IWM 0 DTE begins today. The blind mice trade is simply expecting to see 199.40 this week. The Friday 199 calls, there you go. The Friday 195 calls, there you go. And again, 199.40 would make the 195 calls worth more than $4. Bring you over to your IWM after we go through the SPX really quick. 1, 2, 3, 4, 5, 8, perfect. Picture perfect. 5 waves up. This very well, very, very well could be our wave 4 of this downward wave, having come right over here to this 50.77. And I will zoom out for you so you could see it. Right on there, right where our wave 4 topped over here on the wave 3, wave C bottom. 50.50 or 50.77, 50.79 right there. Very, very nice for a wave 4. And now we get our wave 5, our pop and drop down lower into that 49.18. Most likely down to 49.18, but very probable that we could make an extended little move down there, down to around the mid 4800s. It's possible. It's on the table. It's the preferred view right now, but that's exactly where we're at. We have a nice 1, 2, 3, 4, 5. We could easily extend this a little bit higher and get an ABC, which would be perfect, where C equals A, just a little bit higher at 50.90, just up to around that 50 retracement of the move. But we don't know, and we won't know until we get through today and see how and whether or not 50-55 holds. More importantly, 50-48, and then you have your big gap that was created overnight yesterday. So again, the bullish side is on the ropes right now. On the NDX, absolutely the same thing. Retracement right around to the 38.2 retracement, which for a bearish wave 4 fits right in perfectly. And then the follow through move to the downside, which again, 1, 2, A, B, C, here's your 4. Possibly again, a move extended through the lows that we had from last week, Friday, and then a little bit lower, just around, like we showed before, on the QQQ with that one gap sitting there just below, right to the old all-time highs, which go back to November of 2021. Not the 2023 highs, but the highs from 2021. So very possible, very plausible, preferred view as of right now. Bring you over to the IWM. IWM 199.40, the blind mice trade. Well, you know what? I apologize. Sue me. I will give you the phone number to my attorney because you only made it to 199.32.
I am soaking wet right now.
You only made it there. Yesterday's 197 calls only went 1,300%. From 15 cents at the open to 231 as you fractionally missed that 199.40 blind mice trade.
Mama pinga, pinche joto, puto maricón!
And then you come over to Tesla. Tesla over here, as I shared after the earnings report, the bounce begins at 162. Blind mice. 162. That's how you see 162. You've got your support over here, your support on the dip over here from back in the beginning of April, your support on the little wick move down here on April 5th, your breakthrough as you fell through on April 15th, and here you are at 162. Recovering 162 is primary, but then again, when we sent out that trade setup on Monday for the July or September Tesla calls, it's exactly what I was expecting, is that you were going to get an earnings report and it was going to absolutely be explosive and you were going to get a move to the upside. You had way too many buy divergences, way too close to that big trend line coming down on the bottom. You're down 65% from the all-time highs. You've just been eating a bag of dicks the entire year. And finally, you get your move to the upside, which is why, again, I shared, if you're going to do this, where are we? If you're going to do it, you want to be looking at the July 19th, 160 calls, or go out to the September 20th, 180 calls. Totally up to you. Your July 19th, 160 calls at the time were 11 and a quarter. I have no idea where they're going to open up today. I have been looking at this as well for those who did play the earnings on their own. The April 26th, 155 calls ended the day at $3. In fact, we will look at that as we come on here at the week to date. Yeah, why not the week to date? Tesla, 240426, call 155. You could have gotten them down at $1.86. They closed at $2.90. Tesla, as you see, right in here overnight with an exceptional move right up to that 162. I'll leave the studies. You don't need to move them for this. Move right up to that 162 and trading right here at 159. So theoretically, an open here filling these two gaps from overnight would bring you here right into, again, he got into that spread that is in your alert room. 159 on the 155 calls, they'd be worth $4. Again, having traded almost below $2, is it really worth your risk trading earnings? So today is Meta. And Meta What this prick is going to do is he's going to try and copy Elon Gate. He's going to try and copy Elon, not Elon Gate, Elon Musk. He's going to try and copy Elon Musk and come out with some amazing fucking version of missing on this, missing on that, missing on this, missing on that. But because the expectations were so low and they were expecting billions of dollars of negative free cash flow, instead they got positive cash flow. Meta is going to try and copy what Tesla did. The big gap from previous earnings is still sitting here. And again, because of how these pricks are going to be getting an enormous amount of money from the elections, from all the advertisings being run, don't short Meta. So I bring you on to the futures because nobody really gives a shit because they think, I'm smarter than the average bear. Here you are on the YM. The YM, great recovery, 37,463. We're up here at 38,750. Don't need to be a rocket scientist to figure out that that is 130 or 1,300 points, a little bit better than 3%. And as you can visually see, right back in here into that resistance area at 3,850, 3,900. Again, a very good opportunity for this to be the bearish wave 4 bounce, and a continuation lower is due. Come over onto the NQ. NQ, very similar view. Looking at this from a 10-day view, so you can see the bigger picture instead of being zoomed in. Big drop down, triple bottom at the 2023 highs. Boom, bounce off of this, as you have all witnessed here over the last 2 days. Right up here into the resistance that we had last week, Wednesday, Thursday, before Friday's collapse. Fits again, as I shared on the NDX chart, for a wave 4, a bearish wave 4, and now the bearish continuation wave 5 to the downside. Very, very possible with the 2024 open just 100 points lower than the original lows that we already have, which brings you to my QQQ 402 target. Looking on the ES, again, 10 days, 15 minutes. Here you are right at your resistance area that you had going back a little more than a week ago, Tuesday, Wednesday, before Friday's collapse. Perfect view here for a 1, 2, 3, 4, 5, having retraced the 38.2 and almost making the 50 retracement overnight as we came to our resistance area. And looking at the Russell 2000, with the Russell 2000 having been such an amazing player and such a great zero DTE, and everything was so perfect that even a blind mouse could go out there and make a trade, double his money, and still have a couple of days left on it. But let's go zero DTE. Let's go. Let's get in the credit spreads. We're right over here at the failed support being right up here at 2032 on the Russell 2000 futures, the RTY. We have not made it up to that support. Again, seeing all of those same images on the other, the YM, the ES, and the NQ. You can clearly see here how, as strong as the Russell has been, it is actually the weaker link, just fractionally right there with the NQ. The NQ just being a tiny little bit stronger than the Russell 2000. So yes, undoubtedly looking for a dip, and to bring you in and zoom you in, bring you in here, 5 days. Let's go 5 days, 30 minutes so that it is clear and easy to see. Here is our move. We'll do it a little bit better. Here's our move on the QQQ. Bang, 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 bang. Big drop into Friday. Here's our bounce. Very easy. 1, 2, 3, 4, 5. ABC. It's all up to you how you want to look at it. Right up into our target area that we had talked about, 425.71, after having gotten above that 416.79, which we gapped again above higher after we closed on Monday. We've got that gap to be filled. I would be looking for the retracement on the QQQ. And if we do get a failure and a gap fill down to that 418 level, we are really going to be starting to put pressure and needing to go over there and see what is going on with our VIX, because no matter what it is, today is only one day. Today is only Wednesday. Come on to the SPY, same exact view. Over on the SPY, got your big bounce over there. Come out here 15 days. Right up here to our resistance area from going into last week where we kept failing. Monday afternoon, Tuesday, never even came close to it on Wednesday after the open. The Friday and Thursday fall off, and here we are. Again, perfect view for this to be a bearish wave 4 with the wave 5 continuation, the most probable and the most preferred view at this time. What is going to change that view or implement that view is going to be Meta and Meta reports after the close today. So today is a good day. Today is a good day to sit around, do a little bit of scrolling, do a little bit of day trading, because on our IWM, having reached that 199.40 perfectly, where I would be looking now is to make sure and see and expect that we will be looking at that 194.85. And I was asked last night, why is 199.40 so important? So I bring you to the year to date. This being, you know what, we'll do it custom. Year to date, and let's do it at a 30-minute. If it can fit, let's see if it fits. It does fit. 199.40 is your 2024 open. And as you see, resistance, resistance. Oh, shit, we went above it, and then we gapped down below it. Above it, gap down below it. And then it was there in February where we started to really make that move. Now, as you see here, we have almost taking out the 2024 year-to-date lows. Major blow down there at 190. But having come up here back to this 199.40, and again, we can do it however anybody wants to do it. So let's go and do it. Let's go. 199.31, 34. Here's our big hit. Here's our bottom. Boom, boom, boom. You pretty much can't get anything better than that for looking at this. You know, you've got a good A, a good B, and here's your ABC for your C wave. Do we break down back down there below that 194 and more importantly test that minus 20% from the all-time highs right at 195.57? I would think so. So that would be why if I was going to trade today, what I would be trading would be, and I will pull it up here on the screen because that's what's going to be posted in the room later on this morning. 0424 puts 197. Come on, man. The 197 puts closed at 34 cents. 34 cents is where you closed yesterday. That is what will be the primary view heading into Wednesday, closing bell today, having shared the 197s yesterday. So enjoy your morning. Get ready for Meta. Get ready for the middle of the week, and more importantly, don't forget to remind yourself you've got a good chance. You got a good chance to be financially free if you pull your head out of your ass. Keith, you are an absolute rock star. You took that IWM trade yesterday and you smashed it. Got out early, and that doesn't matter. Ron Jeremy never complained about getting out early. Still got paid. Good job.